So there are numerous corrections. It's very normal to see corrections in a bull market. In the 1979 mania, in a mania, there were six corrections in the silver price within a 13-month period of time, over six, greater of 6% or more. So it's very normal to see what we've seen recently. Now, yesterday and today, silver's breaking up, higher again. Uh, but this when I add all this up, regardless of what the fundamentals are, which to me are more important, but when I look at the price action, those factors tell me that we have liftoff and that this trend is going to continue. We are going to see higher silver prices.
An accomplished analyst, author, and speaker, JeffClark is a globally recognized authority on precious metals. From a technical perspective, JeffClark conveys strong optimism about the future of silver and gold, highlighting their recent significant upward trend. He sees this as merely the beginning of a prolonged rally, underpinned by historical data indicating that silver frequently experiences spikes, irrespective of broader market conditions. Precious metals bulls argue that with prices no longer excessively high, the upward trend could continue, especially given underlying factors such as ongoing central bank gold purchases and the role of precious metals as an inflation hedge. After years of excessive inflation, fiat currencies have significantly depreciated, leading some investors to see precious metals as a reliable protection against inflation. Despite the possible corrections, Clark predicts the current trend in silver and gold will continue. He cites the 2001 to 2011 bull market and the 1979 silver mania, where significant corrections were normal but did not prevent an overall upward trajectory. Silver prices rose on Friday after a two-day hiatus, and they are on track for the largest monthly profit since 2020, based on strong retail demand. The white metal benefits from slower U.S. 10-year Treasury yields, as investors now await crucial U.S. personal spending data, which will help determine the likely path ahead for monetary policies. While expressing confidence in silver's future potential, Clark notes its current CPI-adjusted price of $75 per ounce. He acknowledges investors' frustrations, but emphasizes silver's value, humorously describing it as the crazy cousin waking up after a long dormancy. Historically, silver experiences sharp price spikes, averaging 150% gains. Even excluding the dramatic 1970s, silver tends to double during bull runs. In recent days, precious metals have struggled to maintain their gains, and Friday's much-anticipated core PCE data did not alleviate concerns about the higher-for-longer interest rate narrative. Without significant new bullish catalysts, metals traders have been content to take profits after a strong year in the sector. Nonetheless, the overall outlook remains positive. Now we present you the clips of JeffClark's insights from his recent interview with Vierick Media. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Well, Jesse, we have liftoff. Silver and gold have both ignited. They're pulling back now, but this is just the beginning. I have a high degree of confidence of that for many reasons, which includes the excellent research that Chen's pointing out. If you look at history, there are some very definitive periods where silver just breaks out and goes on a run. It has had numerous spikes since the 1970s, regardless of where the price may be, whether we're bull market, bear market, doesn't matter. There have been numerous spikes in the silver price. That's its DNA. So based on the recent price action, this is just the beginning. If this were the end, it wouldn't even measure as a spike all that much. So I do expect, based on history, again, that this will continue. The other reason I'm bullish on silver that this trend is going to continue is even in bull markets, you have numerous corrections. In the 2001 to 2011 bull market, there were 20 corrections in the silver price of 6% or more during a bull market. If you take out the big correction in 2008, the average silver correction was still over 10%. So there are numerous corrections. It's very normal to see corrections in a bull market. In the 1979 mania, in a mania, there were six corrections in the silver price within a 13-month period of time, over six, greater of 6% or more. So it's very normal to see what we've seen recently. Now, yesterday and today, silver's breaking up, higher again. But when I add all this up, regardless of what the fundamentals are, which to me are more important, but when I look at the price action, those factors tell me that we have liftoff and that this trend is going to continue. We are going to see higher silver prices. Well, the CPI adjusted, inflation adjusted number for the silver price today is about $75 US. So that tells you the kind of potential that we have. So, let's say Chen is right and silver's $50 next month or whenever. Um, once it breaks through 50, then we're going to be off to the races because there's nothing above it, on a chart. So I do think 75 is reasonable to expect. I'm not saying that's going to happen this year or anything. I'm saying that that's a reasonable target for us to put our eyes on. But for those that have been waiting, hey, look, I get it. I'm an investor too. I own silver. I own silver stocks, so I get it. I understand. And it's true, gold will always be the king metal. But silver is the crazy cousin who is still been sleeping off the last binger, so, and now she's finally waking up. So this is what it does. It has the real spiky type of thing. In fact, if you look at the spikes I mentioned earlier, if you measure them, the average gain in a silver spike is 150.4%. If you take out the 1970s, it's still a double. So even on that basis, we're looking at, $45, $50 in this current run. So that's what I'm looking at. The potential, obviously, is that silver has yet to catch up to its inflation adjusted high. Uh, Gold's almost there, basically. It's already taken out its nominal high and then some. Silver obviously is not. It'd have to double to take it out, basically, almost. So I think that kind of underscores the potential. On a fundamental basis, silver is still money and I'm still going to own it. Um, I think the potential is greater there. And I think, as most of your viewers know, silver tends to outperform gold on a percentage return basis during these bull markets. It's happened every time. So I expect that potential to play out this time as well.
During the interview, JeffClark emphasizes investing in smaller producers and junior mining companies over major ones like First Majestic Silver. Clark points out that junior silver miners have historically seen substantial returns, with gains of over 2,300% in the 1970s and 1,600% from 2001 to 2011. He predicts that juniors are undervalued and poised for significant gains, especially if silver reaches $50. Regarding the evolving use of silver, Clark discusses a gradual shift towards more industrial applications. However, he emphasizes that silver's price behavior remains responsive to monetary issues despite this shift. Clark notes silver's 40.7% increase since February 29th, surpassing gold's 15.5%, and anticipates silver's continued outperformance. Year-to-date, YTD, silver has shown a pronounced increase of 32%, with its current price reflecting its dual appeal as both a monetary asset and a critical component in various industrial applications. Given its substantial industrial demand, significant supply deficits, and strong price performance, silver appears poised to outperform gold by 2024. Let's get back to the interview.
I mean, I own a couple producers, Silvercrest Metals, First Majestic Silver, but my focus is further down the ladder. Some of the producers have moved and some of the juniors have not. And so, the fuse is lit. Once the producers move, then it'll go down to the developers, then it'll go to the juniors. Same is true with the gold market. So I think that has yet to happen. And so there's still, perhaps, in my opinion, better value further down the ladder right now. And the reason I like them so much is in the 1970s, the average return for a silver junior was over 2,300%. 23x on your money. From 2001 to 2011, that bull market, the average silver stock gained 1,600%. Then it crashed 79%, and then it gained 845% after the '08 crash. So there's a lot of potential there, and we're nowhere near, like Chen said, these juniors moving anywhere like that. So these things are going to wake up, especially if Chen's right and silver's going to 50 next month. I mean, that's a major catalyst, and I do think these will exercise a lot of leverage. I think the main ones you want to own, I like the advanced explorers, Dolly Varden, Hercules Silver, Vizsla Silver, and hot off the press, just announced this morning, was Eric Sprott just bought another 3 million shares of Suma Silver, one of my biggest overweight silver positions. He spent 1.2 million. He owns about 19% of the company now. So that's a great speculation on my part. I like them a lot. And there's going to be others. We'll have a new pick next month in Pay Dirt Prospector. But I think you do have to invest in some of the new names as well and not just hold on to the same old names. Those are good. They'll be fine. But I think you do need to invest in some of the new names as well, because some of the newer names may see the biggest gains, actually. History shows some of that. So you do want to have some rotation going on. So that's what I'm focused on. The percentage of use of silver is moving slowly more toward industrial use. That's very clear that that is happening. But that doesn't mean we're there, that it's solely an industrial metal right now. I liken it to a barge in a port that is trying to negotiate a 3-point turnaround and go the other direction. That's going to take a lot of time. That's how you can view this move toward more industrial use. And that's supported by the green energy movement, et cetera, et cetera. So that's happening, but it's a very slow moving trend. In the meantime, the price, the monetary issues, is like a jet ski whipping around the waves around that barge. It can happen very quick and very fast and be dramatic. So, again, silver is actually outperforming gold right now in this trend since that began on leap year day, uh, February 29th. So just to let you know, Jesse, silver is up 40.7% as of yesterday's close since February 29th. So basically in 3 months, that's how it's performed. Gold is up 15.5% as of yesterday's close in the same time period. So it's clearly outperforming gold, for a number of reasons. It's a small market, that sort of thing. So I expect that trend to continue, and I expect that to continue to happen. So yes, it's moving more toward industrial use, but its price behavior is still going to act and respond to any monetary issues, and that's what we're kind of seeing right now. And so I expect that trend to continue, meaning I expect silver to continue to outperform gold.
Looking ahead to 2025, silver prices may continue to be influenced by macroeconomic factors and structural shifts in global markets. How do you perceive the evolving role of silver and its potential to outperform gold gains in the future? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.